Hello investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF. It was hard to miss. The big news that came out today was that Israel strikes Iran's nuclear sites, wipes out a whole bunch of their scientists and military leaders, and it did not take long for Iran to retaliate. This news came out today at 325 through Zero Hedge, and you can see some of the highlights that are developing right now. And as a result of this attack, we are seeing oil prices soar. And we'll talk about Bitcoin, we'll talk about the general markets, and we'll start with DIA. You can see here on this daily candle chart that the price has officially closed below the 20-period moving average. Now, years ago, when I had my primetime PBS show, I had a guest whose name was Jim Robach. And I'll never forget that interview because at the time he was the zen of market timers. And I asked him what his secret was, and he came right out and told everyone it's a pretty simple strategy where he'll buy a stock when it closes over the 20-period moving average, like you see here, and he will sell it when it closes below the 20-period moving average. And then he'll short it when it closes below the 20-period moving average on the next round. And so it's basically a moving average crossover method. I continue to teach it to our members. And the last time we crossed or closed below that 20-period moving average was back here in this area. And you can see, obviously, what happened after that. I'm not going to say this is going to duplicate so quickly, but that is most definitely not a bullish signal. Now, when you look down below, the stochastic is crossing with a sell signal, and below that, my favorite, CCI, is crossing below the momentum line. Now, I talk about the CCI quite a bit. Remember that once that zero line crosses, you generally get 2 to 4 days of continued momentum in the direction of the cross. So this is day one right here. So I expect 2 to possibly 4 days of continued movement lower, and we'll have to see how that works out. My longer term downside target on DIA has not changed. It's 368.12. I want to show you the weekly chart on DIA because if you look at the 3-year weekly, you could see that we close with a bearish harami. A bearish harami is as bearish as a bearish engulfing. Here's a bearish engulfing here. This is a bearish harami. It's basically a small body red candle that falls within the body of the previous green candle. Again, very bearish. You can see that the CCI and the stochastic are both hinging. The CCI is almost at a pivot, but you also have to look at the wide divergence on the weekly chart between the %K and the %D on the stochastic right there. You see that? That's one of the widest divergences we've had in 3 years. So that too is bearish. Moving on to IWM, you can see the weekly chart is a hinge on the stochastic. Super wide divergence between the K and the D down here. We see a little bit of a hinge on the CCI down below. But this one is a red candle right at a role reversal resistance line. You see that? This former support here, which was broken here, is now acting as resistance. And that is something that I teach quite often. Pretty easy to remember. Here's the stick figure of what that looks like. It's basically a former support where the buyers came in. Buyers eventually gave up. The sellers came in, moved it below support, and then the sellers continue to hold at that area. It's not uncommon to see prices pull back from a role reversal resistance line. Now down below, again, 175.81 is my downside target for IWM. QQQ, this is the weekly chart. Again, you have that bearish harami. You have to zoom in there so you can see that that is combined with a shooting star. Now, a shooting star is also bearish. It's when the buyers make an attempt to push the price up, but guess what? The sellers come in, fight back, and push the buyers right back down to the lows here. And so that is happening as the price is dropping at this resistance up here. This is more or less a triple top that we're seeing right here. And the more a resistance line is tested and fails, especially on lower volume, the greater the chance that prices will drop from that resistance. Now, each and every week, I give you these little golden nuggets. Hopefully you're tucking them away, maybe taking some good notes. Come back next week and I'll give you another lesson. If you're a brand new viewer to Sticky Trades channel, make sure you hit that like button, subscribe, notification bell, all that good stuff. And I promise you, I'm going to give you some content that no one else is going to give you. Now, on the weekly chart here, it's important for you to take note that this is an open gap below the market. So what will most likely happen is we'll zigzag our way into an ABCD pattern. Once that gap fills, we'll probably get a little bit of a bounce and then most likely a lower D here. So keep your eye on those ABCD patterns. We see them quite regularly. You can see back here, we had an ABCD pattern. Here's A at the top. It reached a low here at B, this little green candle at a higher low, higher high, and that is the pivot. And this is a half signal here on that bearish engulfing, but the pivot came here with a lower high, lower low. So once the pivot forms, you could put the C, and then D usually winds up being at a lower low than what we saw here on B. So that's, again, just a little bit of pattern recognition. I think that's going to duplicate, and there's a good chance that this whole pattern here could very well duplicate back here. Hence the reason why I'm not moving that target on the Qs at 417.67. Moving on to SPY, take a look. We've got another shooting star. I'll zoom in here so you can see that. That is very close to a bearish harami. It's not a bearish harami because it opened higher than the close yesterday, but that's still a bearish candle when you have the long shadow on top. On lower volume, we've got the stochastic overbought. The CCI is overbought and starting to pivot. And here too, we have a gap below the market that will most likely act as a price magnet. Again, downside target at that red dotted line, 497.97 for SPY. Now I'm going to switch to the daily when we look at the VIX because something very interesting happened today. Remember on Wednesday, what did I talk about? I talked about the VIX being on this low support level here, and the oscillators were already starting to move up. And on Wednesday, we had the buy signal on the CCI right there for the VIX. Now, of course, the CCI is not going to forecast war between Israel and Iran, but it certainly gave us a clue that something was going on. And there's a lot of things that are going on, particularly in the option markets, that you have to pay very close attention to. And while I think the VIX could go higher, you're going to have a resistance point right here at 25.53, which is the high from May 23rd. Now, several of our members were asking me to look at Bitcoin. So I'm going to take a look at that for them, and you can see that the price action is closed below that 20-period moving average. But look at the monthly chart. I like to take a step back and show you what's happening here. You see these long shadows on top of these candles? Remember what I said before about the shooting star? Those are bearish. What do we have going on here? Bearish, bearish candle, bearish candle. But to me, it looks like this whole pattern here is duplicating almost exactly. It's almost an exact footprint of what we're seeing. Now back here in 2021 and into 2022, we saw a very interesting thing happening with the CCI where we had a higher price high, but we had lower highs on the CCI. What are we seeing here? Again, we're seeing slightly higher price highs, but dramatically lower highs on the CCI. Not only that, but you see a higher high here, and you're seeing lower highs on the stochastic as well. So you've got negative divergences on all of those highs. So if you're long Bitcoin, what I could tell you is that we promote the 1% rule for managing risk. You definitely want to look at protecting your profits if you have them and minimizing risk when the market moves against you. Now it's time to bring up the trade of the week, and that trade of the week occurred in RH. Take a look at what happened with RH. Now, the stock had dropped from the early part of May and into the beginning part of June. Then it did this little bounce here. Now, this trade went out to our VIPs on June 3rd. And just a quick lesson in options. I do a lot of credit spread selling. I like to sell credit spreads. I'll sell in the money credit spreads. I'll sell out of the money credit spreads. This was an out of the money credit put spread where we sold the June that expired today, the June 13th 150 puts, and simultaneously bought the June 145 puts. Now, if you're completely foreign to options, just follow along with me. I'll make it easy for you. Basically, this is a bullish spread, and you're hedged so that you're not subjecting yourself to an enormous amount of risk. In fact, this spread, the margin requirement on it is $3.90 times 100 shares per contract. So one option contract will cost you $390 margin requirement to put on. But here's the big deal. You put up $390 to collect $110 when you sell the spread. So the risk on it is $390, but if the stock stays over the short side of the spread, this whole thing expires worthless like it did today. You get to keep the $1.10, and as a result, that turns out to be a 22% return in 10 days. And again, I have to highlight that this is an example for educational purposes only. It's not a trade alert or a trade recommendation. You couldn't do it anyway because the options are expired. But when I put out trade publications, especially to the VIPs, I put it out on this document here, which is what I call the trade blotter. And we had other spreads that expired today worthless, and we get to keep the cash. So each and every week, like I said, I'm going to try to highlight a trade of the week, which will help you learn how we're trading the options, what we're trading in the options, and which stocks that we're looking at. So remember, we put that on right here, June 3rd, which was a bullish or positive delta position. And what happened? We saw a buy signal on the CCI. We saw a buy signal on the Stochastic, hence the reason we went with a bullish position. The stock rallied shortly thereafter. It stayed over 150. We get to keep the cash, walk away, have a great weekend. And so this is what we do at Sticky Trades. We show people how to trade. We show people how to read the charts. We teach about options. If you're interested, you could come on over for the 15-day free trial, no strings attached, no credit cards needed. We love doing what we're doing here and teaching people, and our members love the experience. We have live webinars, we have Q&A, we have trade publications that go out, and videos attached to each trade publication to show you what's going on each step of the way. Well, that's it for this Friday, June 13th. Have a great weekend, and I will talk to you next week. So long.